Okay, folks, welcome to Thursday Night Stock Charts Live. Tonight's topic is going to be the Baltic Dry Sea Index and the inflationary pressures that it's applying to the global community. We're going to talk about U.S. retail sales today, a good number. Evergrande, the real estate company over in China, went bust. Markets don't care. Who has counterparty risk to Evergrande? I'm going to talk about that in a moment. We're going to talk about the Federal Reserve's balance sheet, and we're going to go over the weekly charts. How are we poised to close out the week? How does Friday look from a daily time frame to give us an indication how we're going to close out the week? And on Saturday, I'll go over with members to the Contrarian Trader how we close out the week, what is our plan going into the new trading week, and what stocks we're looking at, either to buy or short. Okay, so before we begin, we are going to spend a moment and talk about our sponsor, TrendSpider. Folks, if you're not using automated technical analysis right now, you're missing an arrow in your quiver when it comes down to trading like a professional. So please take a moment, use the link below, head over to their website and check out their 7-day free trial offer. Learn how to automate your grunt work, speed up your technical analysis, and improve your accuracy while reducing costly analytical mistakes. How do you do that? Well, you use their automated trend lines. You use their trade alerts. You use a rules-based approach. If this, then that. If you break out, you open or add to a position. If you break down, you open a position with a stop loss right below. Find winning chart setups with their scanners. Head on over. Again, link below, 35% discount code below. Lowest price on the web. 7-day free trial offer, demo tour. And they have, again, a 7-day free trial offer. Let's say hello to anybody that might be here. Hey, Bo. Hey, Bob, can you review Nari's chart, please? Sure. William. Hey, Bob, how are you doing? Doing well. Thank you all. Hope you're doing well. I really noticed a supply chain issue this week. Yeah, it's funny you said that. I was over in Costco the other day, and it was on Sunday. I just left the gym, went over to Costco, and I went over to. I get the chicken breasts and I slice them and I grill them up for the week. I went over to the chicken breast aisle, and usually they have stacks chicken breasts, and it was empty. It was like there was like maybe 10 pieces when there's usually well over 100. So I'm looking. I asked a guy standing there. I said, "Is it me or is this thing empty?" And he goes, "Yeah." He goes, "Something's wrong." I said, "I'm taking 2." So probably a lot of other people are thinking that way too. They're stocking up, and that's how you stoke the fire of inflation. Eric, hey Bob, can we look at NEO in a bit? Sure. If we have time, absolutely. All right. Let me grab a sip of water. I just got back from the gym. Heading into my second weekend of sober October. Feeling good. Down a couple of pounds. Okay. So this is off a zero hedge. Record shattered. 61 container ships stuck waiting off of California. Look at this. Look at this. The demand is insane. The question is, what is driving the demand? Think about it for a moment. What could be driving the demand? You have so many job openings. Top shipper warns commodity freight prices about to go parabolic. Anybody hear inflation there? Is that transitory? I don't know. Maybe. So we need to think about a couple of things. And in this case here, it may be transitory, not to be flippant. We have the stimmy checks, which ended this week. You saw retail sales do well today. I believe the last report, they guided down. They adjusted down, but this one came in pretty good. But remember, the stimmy checks end this month. So it's going to be interesting to see how September looks in October. Hey, Michael. I love everyone bullish on Bob always, as always. Thank you, Michael. Appreciate that. So, uh, this article here about dry bulk freight rates is really, really important because somebody's got to pay that bill, and it's going to be us. It's going to get passed along to us. And then the chart I want to show you is the Baltic Dry Sea Index. For those not familiar with what the Baltic Dry Sea Index is, it is the cost of moving freight via dry bulk shipper, not a oil tanker or not a tanker, but dry bulk. So basically, whatever's coming in from China is dry bulk. So this is the cost to move those goods, and this is a monthly chart, and we are at highs not seen since May of 2010. A massive, massive rally here. And I mentioned earlier when I said I was being flippant that, you know, this may in fact be transitory, but in the short term anyway, we're going to see inflation. Why might this be transitory? Well, people are running out of money. Yeah, they still have cash on the sidelines, but they're running out of money. They gotta go get a job now. There's no more sitting at home, or it's going to be less accommodative to sit at home and to spend money on Amazon. So what we're seeing here with all the money that's being spent, and economists will point you to this chart and say, look at this chart. Isn't this wonderful? Look at our GDP. Now, not all economists would say that. Your Keynesian economists would say that. Your Austrian economists like me or Peter Schiff would say, no, 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 no. This is not an indicator of how our GDP is going. It's an indicator of how Asian GDPs are going, because we're not producing the goods that are being imported. We're buying the stuff that's being imported that are produced over in Asia. So they're on a tear over there. They're having a great time at our expense. So we're sending our dollars offshore, and the result will be that at some point in time, those dollars are going to come home, and you're going to see inflation ripping through the ceiling. So this may be temporary, but the damage that's been done is going to go on for a while, and we're probably going to see a bit of stagflation. Why is that? Well, we have pulled so much demand forward, right? The washing machines, the dryers, the stuff that people could have waited on, they've pulled forward because the government paid them to stay home. They paid them more to stay home. That revenue source is now going to dry up a bit. Remember, they were getting tax-free money, $300 a week or a month, whatever. It's a lot of money. So I don't know exactly how much it was, because I was just paying it out. I sure as hell didn't get one penny of it. I just paid the bills. Bob's giving a master class in international commerce. But you know what? It's so simple, you know, and these guys want to come on TV and they want to make it so complicated. It's not that complicated. We're not producing the goods that are being consumed. If we were producing those goods, you wouldn't see dry bulk shipping rates ripping through the ceiling. They'd stay at home. So we're simply not being leveled with in this country, and the chickens are going to come home to roost. So retail sales today did rebound in August. We saw a pullback in used car sales. I believe new car sales picked up that slack, if memory serves me. Here, the stimmies having dried up. The question is whether the post-COVID lockdown surge in retail sales will inevitably suffer a hangover return to trend. I think that is entirely possible. Stagflation. Okay. I'm just looking at this snippet here. I'm trying to understand it before I say anything. Yeah, inventories to sales is completely decoupled from anything that has come before. Yeah, this is a very inflationary chart here. We've never been this low before on inventories. So what does that mean? The cost of goods are going to go up higher. They have to produce more over in Asia, ship them over here at a higher cost. Remember this article here. Top's shipper warns of, I'll share this article, of freight rates about to go parabolic. Okay. Probably the least reported story this week has been Evergrande suspends trading of all bonds. You haven't heard anything about this. With the exception of the money honey, the ever lovely, stunning, the Sophia Loren of our time, Maria Bartiromo. She was out this morning and she was talking about who has, and I've said this before, the question will get asked, who has counterparty risk to Evergrande and who comes next after them? And Maria Bartiromo, who happens to be outstanding at her job, besides being extremely lovely, she came out and said one of the biggest players that have exposure to Evergrande is none other than Vanguard in their equity funds. So, shocking that this has not been spoken about more. It's stunning that with all of the companies that are, we're going to go over NEO in a moment, the Chinese stocks that are just getting monkey hammered because of the Chinese, I don't know, they're stepping away from capitalism, I guess. I don't know what they're doing, but they're taking our money. Remember, we have a lot of pension money stuck over in China. What if we can't get it out? Their worldview is not the same as our worldview. Not that our worldview was our worldview of 10 years ago. I don't know what our worldview is right now. We'll talk about that another time. But as the Chinese like to say, we live in interesting times. And the fact that nobody's talking about this is stunning. And I know there are people on the Twitter sphere, some big names that are saying this is not a Lehman moment. I would argue different. This is a $300 billion company. Gone. Crazy. This is a sideshow here. I think we need to keep an eye on it. With the bad blood that is between the Republicans and Democrats, this might be just a show. In the end, usually it is. But keep an eye on an effort to miss the budget deadline. As McConnell rebuffs Yellen's over debt limit limbo, Democrats infighting risk delaying a $3.5 trillion package by weeks or months. Listen, folks, I never would have thought before. I would have always defaulted to this is definitely theater. Definitely theater. But I never would have thought that we would have had a pullout like we did out of Afghanistan. It seems intentional, self-inflicted, the damage that we did. COVID, I don't know if I'm allowed to say the M word, but the demands of our federal supreme leader to get vaccines, whether or not you agree with them or not. Might we miss a debt ceiling payment? I don't know. If we do, it's Armageddon. I'll tell you that right now. We miss one bond payment. It is Armageddon. So keep an eye on this. I don't think it's going to come to fruition, but with all the crazy stuff going on nowadays, you never know. The Federal Reserve's balance sheet from last week, $8,357,314,000,000. It was $800 billion right before the financial crisis, folks. This week, well, $8,448,770,000,000. That's about, let's just round it off to $100 billion spent 1 week. This is why bond yields are so low. And we were talking about this last week, about the 30-year bond, how they were going to manipulate it. I said it this time last Thursday. I said it's going to be very, very interesting to see what the Federal Reserve's balance sheet is going to look like next week, because it's going to take a lot of money to manage that longer-term yield curve. And sure enough, $100 billion in 1 week. madness. Let's go to the weekly charts. Samuel, hey man, you might be right. You might be right. The way things are going right now, you might be right. And God, I hope I'm wrong. I hope we're all wrong. Because if we were to ever miss on a bond payment, things would get real fast. I'm talking like third world fast here in this country. Real fast. Capital flight, gone. Michael Anthony Carter. Bob, you should clip the part about the Federal Reserve balance sheet, how it went from... Yeah, I could show you. You want to see it? Yeah. There it is. Here's the financial crisis. Slow and steady before. You know, very slow. Parabolic. Sideways. Drift up. Here's the taper. That didn't work out that well. Remember the taper tantrum? Rip. Stunning, huh? All right, let's go to the weekly charts. All right, when I go over these charts, what I like to do is, it's only Thursday, and many times I say this every week. I always say there's one trading day left to go, and without fail, every Saturday I'll go over the closing charts, the weekly charts with members on the week ahead commentary, and sure enough, we'll go over a few charts and I'll say, wow, look at the change from Thursday night when we went over these. So please keep in mind that as we go through the charts, that what we're looking at right now may not be the closing price action that we see by end of business on Friday. So we want to keep an open mind. But by and large, we're going to have a clear picture of how we're about to close out the week. Okay, I never saw this before. 3-year inflation expectations, I've never seen that before. 4%, I think that's light. They're probably pulling that from the CPI. And the CPI came in hotter than that on an annualized basis. Speaking of the CPI, we had core CPI miss. So when you X out food and energy, oh, that's great. We had less worse inflation. But when you look at the headline number, well, we paid it. We had to pay the food and we had to pay the energy. But the Federal Reserve is going to say, Bob, it's transitory. It's transitory. Don't worry about it. Don't look here. Look at the core number. Look at here. Don't look here. Look at here. Until it doesn't work out for them. And if it gets inverted, oh, no, look at the headline number. Or if they're both bad, look at the PCE number. That's the one, that's their favorite one. So, core CPI is a joke. Why? Hedonic adjustments. The owner's rent equivalent, basically they ignore rising rent prices and they say, well, what if this person would have bought a property? Well, their housing costs would have been lower. Oh, we'll use that number. We'll use that one. And they just take the rental spike in monthly rental payments and they ignore it. They throw it out the window. And you know that's not transitory. Anyway, I digress. I'm not going to go over household income. That is really, this is the first time I'm seeing that too. Import prices, they say that decline. I find that very, very hard to believe. Very hard to believe. We started the show off with this. The Baltic Dry Sea Index. Right? Top shippers warns commodity freight prices about to go parabolic. They've already been going parabolic and they're only going higher. So how is it that import prices declined last month? I find that hard to believe. And we not only did they miss, they expected a increase of 0.3%. They missed by 6 basis points. Think about it. 0.6 basis points. Think about it. The reason why the markets rallied yesterday is that you saw the Empire State Manufacturing Index rally. The result came in very, very strong, much better than expected. Today, the Philadelphia Fed Manufacturing Index also came in stronger than expected. That's a good thing. So not all bad here. Retail sales came in as expected, ex autos. Retail sales did better than expected. Tomorrow, you're just going to get the University of Michigan Sentiment Survey. That's not going to move the market. I think that tomorrow, in all probability, we're going up higher. Why? It's not like your jobs Friday. You don't have a big economic report. And tomorrow is triple witching. Is it quad witching or triple witching tomorrow? If somebody knows that, please drop it in the chat box. I think it may be quad witching day tomorrow. Let's go to yields. All right, so weekly chart. We're going to start off with all weekly charts. And 480 shenanigans. Millions are about to lose jobs due to mandate. Yeah, you saw the... I don't think he's ever going to sign that paper. I don't think he's ever going to sign that. He never, as far as I know, and somebody fact-check me on this, I don't think he's ever signed the executive order. But from what I do understand is that what their strategy was to scare people into getting the shots. And from what I understand, there are lines out the door to get those shots in advance of the paper getting signed. People just assume it's the law of the land. They don't know it's got to be signed off on. So he knows he's going to court on it. A federal judge here in New York struck down the state's ruling that healthcare workers had to get vaccinated. It struck down the mandate. And there was another judge in New York City, of all places, which I believe struck down a mandate by the mayor. So they're on very, very thin ice. I think they know it, and in all probability, it's not going to work out for them if they do sign off on it. And it's going to if the Supreme Court or a federal judge overturns it, and the Supreme Court says we're not going to rule on it, we're not going to take the case, or they side against the president, he's got a lot of. I mean, he's already underwater with his numbers. That is going to decimate him. So I don't think he's going to sign off on that document. Yeah, I'm from Wilmington, Delaware. Michael, hello. We made national news this morning. Why did you make national news this morning? Maybe I'm just stepping into a trap here. Okay, I'll bite. Why are you getting national news today? Happy to be in Tennessee for the time being. Okay. All right. All right, let's go to the 10-year yield. So the 10-year yield is down on the week. We remain stuck in they fired the healthcare workers down there, huh? So here's going to be the spin from that. Here's what they're going to do. I don't know if anybody's seen this, but you really ought to listen to it. We're dealing with a bunch of nefarious people, but they're not the brightest people in the world. I'll share this with you. This actually came out a couple of days ago. I'm surprised it just made it to Zero Hedge today. And what they're going to do is this, is that, here. When did they send it? Yeah, this came out only today. This has been out for a day or two already. So, leaked Zoom video exposes hospitals officials discussing COVID-19 scare tactics. It's insanity. You got to listen to the video when you get a moment. So what they're going to do is, due to these nursing shortages, they're going to shut down wings of hospitals. And they're going to blame it on the unvaccinated. And you're going to see hospitals fill up when more nurses get overworked and probably quit because they're exhausted, or the hospital beds are going to get filled up and you're not going to have enough nurses to take care of them. And they're going to say, oh, look at this. The capacity of the hospital is at 80, 90% capacity due to the CCP virus. The CCP virus. But they don't want to say, oh, no. It's not because we let nurses go. No, yeah, normally, well, if we had a full staff, we'd be able to take more. But due to the fact that we fired our staff, well, we're going to blame it on the unvaccinated. That's what's going to happen. 2 FDA officials resigned. Yes, I read about that. CDC Director resigns. I did not hear about that. People need to wake up. Yeah. Listen, Cardi B. Look, you want to talk about a red pill? Look up Cardi B. Look what they did to her. Anyway, let's go to the weekly charts. I can rant on this all day long. My wife is a nurse. I drive her nuts. All right, so weekly chart. Down week so far. We're stuck in a triangle formation, a rising wedge formation, whatever you want to call it. Call it cupcakes. It doesn't matter. We are at we're at the apex of either a breakout or a breakdown on yields. Let's take a look at how we did today. To blow this up. Stokes are losing momentum down below 50, but they had a good day today. But here's what is interesting about the daily chart of the 10-year yield. And remember why it rallied today. Right? You saw good, strong economic growth out of the New York State Empire State Manufacturing Index and the Philadelphia Manufacturing Index. So TNX rallied today, but it faded off the highs, resistance at the 200-period moving average. The question is, do we break out of this consolidation or do we fail? I mean, if we trade sideways here, stocks can rally. No problem. Stocks can rally. The TLT weekly chart attempted a breakout early on in the week. We're above resistance, and this is why I always say, wait till the final. If you're using a weekly chart, wait until Thursday, Friday to determine whether or not you have a strong weekly chart. If you're going to trade off of the weekly chart. If we're breaking out on Monday, who knows where it's going to be on Friday. So don't make any decisions on Monday, Tuesday, Wednesday. Wait till Thursday, get a feel. Friday, even better, for how we're poised to close. So at current, we're at resistance at 150 on the TLT. Let's take a look at a daily chart, how we closed out the day. Daily chart, we're holding support down on the day, down nearly a half percentage point. It's no joke. And it's kind of disappointing because we rallied really strong here on the 14th, and then we gave it all back. Volume is below average. Stokes is still looking good. So we still have some momentum here to break out of. The dollar. We are down on the week. You wouldn't know it from today's price action. Sorry, folks, I'm dehydrated. So let's update this because I put this annotation up here based upon a hunch that we may roll over on Stokes. And so far, we are not. We are trending higher, but we're still down below 50, as is RSI. We're stuck in a trading range here. Given the fact that we are printing so many dollars, I have to think that the probability of a breakdown is pretty good. The euro started off the week strong. Let's see how it looks. Yeah, it had a nice week last week. It pulled back. I must be thinking about last week. Oh, no, this is a daily chart. Sorry. Let's go to the weekly chart. Oh. This is a good-looking chart. fuck am I missing here? Oh, I pulled up the FXY. That's why. FXY. FXY, this is the yen. I pulled up the wrong chart. FXY is looking very good here. Now, the reason why I'm spending any time on this whatsoever is because the yen is the second largest component of the Dixie basket. So it's very influential. The first component, the largest component being the euro. So the yen is looking pretty good. All right, now I can take a look at the euro. I pulled up the wrong chart. Let's get rid of this. Yeah, here's Monday, Tuesday, a really good strong start to the week. Money flow is stabilizing here. Ultimate oscillator is not looking good. MACD is very long in the tooth. Actually, no, this is a weekly chart. I'm all messed up right now. Yeah, this is not a good looking chart. So the dollar rallying today really tanked the euro. So we may see additional strength on the U.S. dollar. This is a very bearish chart. Maybe we'll rally to fill the gap tomorrow on the euro, but not looking good at all. The tips. Weekly chart. We're down in the week. These are Treasury inflation protected securities. Don't like the choppy price action on Stochk RSI. Daily chart. We gapped down today, held support, but the tips are under pressure. If yields move up higher, it's going to be difficult for the tips to rally. But the path of least resistance still remains to the upside on the tips. The dollar. Down on the week. Now this is the Dixie itself, not the UUP. Doji, close to a doji star formation on the week. Daily chart. This is not updated. This is not updated. This says as of the 16th. The dollar was up today, not down. This is as of yesterday. This is not an updated chart. Ignore it. We spiked up higher today on a daily time frame, which is usually UUP. Stockcharts.com. Got to get your act together if you're out there. We gapped up strong, and we saw a bit of a fade, but still, net, very strong day for the dollar. Stokes are back above 50. RSI back above 50. Momentum is strengthening on the U.S. dollar. Not good for commodities, not good for a couple of positions I have on, to be frank with you. The VIX. The weekly chart, down on the week. We did put in a new weekly high. Stokes looking very, very strong here. Very strong. MACD is positive. Daily chart. Daily chart, not horrible. Forming a little bit of a compression zone. We were up today. This is like a bull flag setup. Watch your Stokes on the VIX. Watch them flatten out. RSI bounced off the 50 mark today, which is your neutral zone. Now, stocks did rally off the lows of the day, but this is a bit ominous. Moving on to the transports, they are up on the week, over a 0.5 percentage point. Volume is going to roll in very light. Stokes still weakening. Daily chart. Now, we gapped up today, but we faded on the day. Volume is strong, but some of that was selling because we faded. So expect some backing and filling here on the transports. Maybe we're forming a W formation. The Dow Jones Industrial Average weekly chart, still very weak. Very weak. We broke support last week. We did put in a new weekly low this week, but we've rallied off that low. Volume to the upside, very light. Daily chart. Daily chart, we had broken down here on the 10th. We've been struggling to fight back and close back above resistance now for several days, unable to do so. Stokes potentially rolling over, RSI, lower highs, threatening to break down to new lower lows. Down volume today, just below average. The S&P 500 weekly chart. We're at the precipice. We're holding on to the rising lower band of support. Stokes are rolling over. Volume to the upside is light. Daily chart. Now, in a daily time frame, we broke support. Not here on the 13th, but here on the 14th. And we've been attempting to recapture this support level ever since. So this is akin to a breakout, right? You get a stock that breaks out, then it pulls back. What was resistance should now act as support, right? That's a healthy breakout. The same thing is happening here. You have traders that have witnessed a breakdown, or some that don't know the stock is broken, the index is broken down. They're buying the dip. They're trying to bid it back up above resistance, but it's not happening. They're not gaining traction. There's just simply not enough buyers out there to push it up higher. Maybe tomorrow. I'm not making a call here. I'm just saying that this is the market that we know right now. It's an index that has broken daily support, not weekly support, but daily, and is struggling now to consolidate, threatening not to break down and see a continuation breakdown. We break down below 4,367 and close there on a daily time frame. We have a new downtrend in effect. So just a bit of a warning flag here on the track. And this is the first time since, think about it, since back here, October of 20, nearly a year, that we've revisited stochastics down below the 20 mark. Crazy. The small caps. So the small caps are actually up on the week. And earlier they were trading down below the lower band of this support level. And I think there's still a good chance that we break it, because take a look at your indicators. They're a hot mess. Your Stokes are a hot mess. RSI maybe firming up here, W formation, maybe putting in higher lows. Volume light this week, but not horrible. We have one trading day left to go. Daily chart. Daily chart, we broke down below support on the 14th. We were able to hold support, recapture support on the 15th. Today, doji star formation, sign of indecision. Stokes still declining, down below 50. Up volume today declined and was well below average. Qs, weekly chart. Weekly chart doesn't look bad. But this is a hammer formation. Not my favorite. It looks bullish. It's really not. If you go back in time, you'll note that hammer formation here, April of 2019, huge rally, and then we just stalled out. Hammer formation, then we pulled back. I think the same thing is possible here on the Qs, especially if yields rally. Daily chart. So we had a reversal day yesterday and today. Let's just say we closed at resistance. How was our volume? Volume was good. Yesterday, today, good volume. Stochastics hooking up. RSI hooking up. So the question now becomes, if we do rally, do we take out prior highs or do we put in a lower high? And if we put in a lower high, do we break to new lower lows? That's going to be the $1 million question. The banks. So with the banks, it's all about yields. And remember, we spoke earlier about Evergrande Partners, over the real estate company over in China. So it was interesting that for the past 2 weeks, yields have rallied, but the banks haven't. The correlation between yields and the banks is very, very tight. Let me illustrate. Traditionally, the correlation between the banks and the 10-year yield is normally very positive. I mean, they're back here earlier in the year, tick for tick, almost 100% up days for the banks along with the 10-year yield. But that fell apart recently, really bad. And now they've decoupled anyway in the short term. So could this have to do with what's going on over in China? It's certainly possible. The issues going on with Chinese stocks listed here in the United States have been going on for quite some time. And even now, of all people, I wouldn't even, a lizard person, of all lizard people to come out and ridicule BlackRock for doing business over in China, George Soros, the king of all lizard people, George Soros, criticizing the Chinese. So I guess he sees competition in evil. I guess he wants to be the top Bond villain, and the president of China is giving him a run for his money. So anyway, I digress. The correlation should be higher, and technically banks should be higher with yields rising, but they're not. There's something off here. Daily chart. Now, on a daily time frame, we broke out yesterday. Today, a pullback and a possible retest of the breakout point. So if yields break out, you got to watch the banks. I like FAS. That's the leverage ETF, putting you long on the banks. XLK, technology. We are hanging on by a very, very thin thread here. We are barely holding on to support. We were below it earlier. One trading day left to go. Volume is not horrible this week. But net on the week, they're not a huge move here. Daily chart. 2 bullish key reversal bars, very similar to the triple Qs. On volume, very similar to the triple Qs. The semis, weekly chart. They're up on the week, respectively, about 1 1/3%. Horrible volume. The daily chart looks very good. We broke out here on the 13th. We're consolidating. I would like to have seen a breakout by now. It's kind of eerie that it hasn't. But we did see an outside reversal bar, also known as a bullish engulfing bar today. Stokes are rising. Volume disappointing. Watch the semis. We should break out here. Biotech's down on the week. Still stuck in a trading range on the Stokes. RSI has already broken out. How's volume? Very light. Daily chart. Daily Stokes down below 50 and declining. Avoid. Let these get resolved. Let these Stokes get resolved. Ooh. Nice bullish reversal bar on the day. But still, let these Stokes begin to flatten out, hook up. Then it becomes interesting. Volume, very, very light. Warning flag on the track. Consumer discretionaries, weekly chart, strong. Retail sales certainly didn't hurt that at all. The bearish divergence on a weekly time frame is still very healthy. We are seeing lower highs on RSI, yet we continue to press on and put in new all-time highs. That's not the best thing in the world. Volume is good this week. Daily chart. Good day today. Up over up nearly a half percentage point. Higher lows and rising Stokes. RSI solid. Volume really, really solid. 2 accumulation days. Actually, 3 accumulation days out of the past 4. So we're probably going up higher here. I like the semis, and I like discretionaries. Energy broke out this week. Why? Rising yields. The perception is that you have a growing economy. And the industrial reports that we got this week helps goose that narrative. Daily chart. Down day today. Good day yesterday. Volume. Heavy. Natural gas. We may be reaching a peak here. You know, 1 trading day left to go. They can rock this higher. But right now we're leaning into the 3rd standard deviation Bollinger Band. Pretty overbought. Volume is light, but it's risen over the past several trading weeks. RSI now at 81.16 and go higher. Oil. I think oil is breaking out. Let's update this. Yeah, I think it's going to break out. So if you get a breakout on energy stocks, the correlation with energy stocks is very tight. If you get a breakout on oil, you got to look at the energy stocks as a possible trade. Daily chart. They gapped up yesterday. Today we came close to filling the gap, reversed, bullish reversal bar. Volume is very light today. Emerging markets. Monkey hammered this week. This is a leveraged ETF, so keep the percentage in mind when I say it. It's a 3 times leveraged ETF. Not 2, 3. Down over 5.5% on the week and probably going lower, especially if the dollar rallies, folks. Avoid emerging markets. Gold. All right, so monthly chart here. We've been flirting with a breakout out of a cup with handle formation. The thing that's been haunting me, and I've been very vocal and public about this, is that you still have these Stokes that are declining down below 50, like watching paint dry. So I can't get overly enthusiastic on gold or the miners until such time as we bottom out, flatten out, and begin to hook back up. And ultimately, we break out of this bull flag setup. This is over a year-long consolidation. And man, when this goes, we're going to take out the highs like that. So, but right now is not the time. Weekly chart. Weekly chart threatening to break down to a new lower high. A new lower low. And we have a lower high. Stokes rolling over, RSI rolling over. You know, I want gold to move up higher because we own the gold miners, but we don't speak our book here. Daily chart. Destroyed today. Very similar to the crash back here, and then we rebounded. So you got to wonder if there was some shenanigans going on. I don't think that there were, because you had the dollar that rallied along with yields today, and that's always a bad thing for gold. Rarely is a good thing. The only time that you'll see the price of gold and the dollar rally for any length of time is when you have a geopolitical event, war, a terrorist attack, something like that. The mining stocks hammered. Down slightly on the week, but they were hammered today. These are the junior miners. Look at this gap down. Broke support. Damn, a lot of damage was done today on massive volume. So I own this, right? And I'm saying don't buy it. Don't buy it. You know, this is an investment for us. It's not a swing trade. So I'll weather the storm. I may need to sell covered calls at some point in time, but I would not go buying it right now. We also own the SILJ weekly chart, reversal bar on the week. Another one where we may just have to sell some covered calls. This is more of an investment. These are part of our inflation portfolio. So they're longer term investments. Silver, weekly chart. Brutal week. At current, we're down below support. 1 trading day left to go. Daily chart. Annihilated. But I think in a year from now, 2 years from now, you're going to be looking back and saying, my God, what an opportunity. I already have a position, so I'm not adding more on weakness. I want to add more on strength, not weakness. Oh, this is our, we just put this trade on. ETRN, Equitrans Midstream Corp. I just like the chart, and it's a natural gas play, and plus it yields. We're getting paid over 6.5%. You can see that came in a little bit now, but we've rallied. So we have a monthly breakout. I believe we bought this month at the beginning of the month, and we've moved higher. This is a profitable trade now. Weekly chart. Nice breakout here. 1 trading day left to go. Don't get too excited yet. We want to make sure that we close above this resistance level. So we'll watch it tomorrow. and expect if we break out and close above, as we are right now, above this resistance level next week, if you're interested in the stock, wait for a pullback, wait for a retest of this blue line at around 970 per share. Actually, I'm sorry, 940 per share, 940 per share. RSI rising, looking very, very good. What else do we have? Town Main Foods, it's up on the week. We own this. And let's do some stock chart requests. I got to go to the members area. See what they requested first. SPCE. Yeah, I like SPCE. I was looking at it today. All right, SPCE. PLTR. Neo. I have 2 requests for Neo tonight. Okay, we're going to go to 7 o'clock. I'll go over these, and if we have time, I'll take requests from the audience. Able, NAR. You have an apostrophe S. Is the symbol NARI? Neo we got. What else do we got? Cisco, JD. You guys with the Chinese stocks, man. All right. SPCE up first. I like SPCE a lot. Weekly chart. It's hard to see it, but we have a doji star formation on the week, a sign of indecision. We may be buyers of SPCE tomorrow. We'll send out an alert if we do that. Daily chart. We gapped up today, up and into resistance. What I was looking at earlier today was, after the close, the 1 hour chart. Oh, it looks like it gave up a little bit of real estate. We had broken out. We gave it back up. All right, so you know what? I'm not as enamored with it as I was before. All right, so we'll keep an eye on this. Maybe we'll sell some puts. That's a bullish trade. If I sell puts, it's a bullish trade. All right, let's bring up PLTR. Wow. Beautiful day. Nice breakout here. Very nice. We broke out on a monthly time frame. Weekly time frame, we have a breakout. Loving it. Daily chart, outstanding. It's going up higher. Look at the volume. Love it. Thumbs up. Bullish. It's a buy. Neo. All right. If you're buying these stocks, your senior partner, literal senior partner, is not just your broker, it's the Chinese Communist Party. That being said, you're at support. You're at the lower band of a triangle formation. You're well off the highs of the month. We have several days left to go. Maybe we're going to rally back here. Weekly chart. We have broken weekly support. So this is what I get worried about, right? You sell off, you rally, then what do? You form a bear flag setup. What is a bear flag setup? It's just a continuation pattern. You rally, your oversold condition becomes undone. The pressure's alleviated. You get some bottom sellers, buyers in there, and then ultimately you fade away. So it's broken support. I do not like this stock. I don't like any CCP stock. Daily chart. We broke down yesterday. Actually, we broke down on the 14th. Attempted to recapture yesterday, failed today. Continuation breakdown. I would avoid this stock. Nari. Let's take the automated trend lines off. Monthly chart is interesting. No new monthly low. It's an inside month, no new high, no new low. We're holding support. We have reversed off of that support level. And we've broken out. Weekly chart. Good week so far. One trading day left to go. We retested a support level down here at 77.25 thereabouts. We have reversed on the week, back above resistance, now support. A close above this mark would make this stock very interesting. Let's just see if we have any. Okay, so you can see with the automated trend lines, we bounced off of the support. If we do rally, resistance level number one will be here. That'll coincide with this upper band of resistance. If we break out above 85.38, expect that this blue line here, you can set an alert if you want to do that. If you're long, this line here is going to act as your upper band of resistance. So if it's a swing trade, if you're long now, the minute you do get long, set up an alert up here that you want to get notified when we hit resistance. So that way you could book some profits. And you can keep this active for a very long time. And you could set it up to trigger multiple times. A lot more than 4. So it's a really good piece of functionality. So it's good looking. I would watch to see how we close out the day tomorrow or the week tomorrow. But it's looking good. It's an early stage recovery play. I like it. Let's check out the daily chart. Daily chart, you're still stuck in a bit of resistance here. Any breakout above 80, what's the high here? High 81.81. A close above 81.81, bullish to buy. Cisco. I am over time here. I'll finish off these two, JD, Cisco. All right, so the monthly time frame we've broken out. Here's the value of the automated trend lines. For folks just joining in, 35% discount code to TrendSpider. Weekly chart. Bearish reversal bar on the week. Daily chart. Don't like it. Here's the value of the automated trend lines. Right? Don't like it here, and I really don't like it here. We closed down below support. I think it goes lower. JD, we'll leave it off of JD. The monthly chart looks pretty good. Not this month, but, well, actually, this month is not horrible, and I'll share with you why, despite the fact that we're down in the month. These two bars here, this is a reversal bar. So while this is a fairly bearish candlestick, it was negated in August. And this month, we had a continuation breakout, new monthly high, but we couldn't hold it. Weekly chart. So what it looks like we're doing here is that we broke out. Now we're doing a retest. The problem is that we're down below the support level. You really need to see a rally on JD tomorrow. It's got to rally and close back above 77.50. If it does that and it closes there, then it becomes interesting as a long. Daily chart. Bullish engulfing bar today. Very bullish day. On light volume, though, but watch for that breakout. And if we close above resistance tomorrow, game on, bullish. Folks, thanks for joining in. And I really appreciate you guys being here, spending time with me. And I really enjoy the heck out of it. Hope you get some value out of it. Hit that like button if you haven't already done so. And tell a friend, share. 35% discount code on TrendSpider. I give it away free to the contrarian trader. Join us. Link below to the website as well. And everybody have a great trading day tomorrow, a profitable one, and have a great weekend. Be well.